Test microphone. Yeah, look, working. So, hi everyone, and welcome back. This is trading review number 2. Today is Tuesday, the 7th of July, 2026. And this is a trading review that is not going to be a pleasant one. I have finished my London session down. But more importantly than this, I broke 2 of my main rules, 2 out of 4 rules, the most important ones. So let's go through the charts. I will show you exactly what I saw this morning, why I took the trades that I did, what went wrong, and I don't know, some lessons perhaps out of it. So let's hop onto the charts. I'm gonna be on the terminal. This is the terminal from Fiverr's, exactly their embedded platform where I do my executions. I have ultimately decided to annotate this chart instead of going into my charts on TradingView where I have all the nice helping hand sessions and all the other drawing templates and everything else. I don't really use indicators. Yesterday I expressed in my other video that I have indicators, but these are not really indicators. They are just more like VWAP I don't really use. These are, I don't even know what they are, initial balance and so on. I don't use them. ICT, higher time frame candles, I don't remember using this or adding this. I don't know. Sessions, yes, I do use. And ICT, everything is basically an indicator that JadeCap FX he recommended to use for levels and what is it, projections of Asia highs and lows. It has a lot of things that are incorporated into it. Where is it? Over here, inputs. You have like levels, opening prices, midnight levels. Yes, midnight levels, very, very important. Standard deviations. I don't use standard deviations, but he was explaining this indicator in one of his videos. Anyways, so I thought it would be a very good point to do a bit of introduction in my style of trading, because I realized yesterday that I went into a breakdown, but for somebody who doesn't have any contact with trading, where he's just starting his journey, this is going to be a bit cloudy. Like, you are not going to understand. Somebody who's advanced, yeah, perhaps he can look at this chart and say, okay, that's it. I understand exactly what he means when he did this and that. But for somebody who's new, maybe not so much. So I will go through every single horizontal line, and I will try to be as fast as I can to explain why I'm putting these lines there. But before anything else, I think it's very important to say that my style of trading is mainly revolving around liquidity. So I am an intraday discretionary trader. And the reason I'm naming myself discretionary is because most of the times you will see somebody saying that, okay, my strategy is very simple. I'm marking previous week's highs or lows. I'm waiting for that level to be tapped. I'm waiting for a reaction. I want to see an engulfing candle. I want to see a V-shaped reversal. I want to see a strong momentum candle, and afterwards I'm looking for a retracement to buy for the continuation as a reaction from that level. If you look at the chart over here, I have what? 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7 lines. That's quite a lot for somebody who's trading a framework, a previous weekly high or low, or a previous daily high or low. So what I'm doing discretionary is that all these levels are every single day on my chart, and I'm looking at reactions around these levels. So as a discretionary trader, I think the most important thing is to say that I use the higher time frames for context. Then I go down and use the trading sessions to frame my ideas, and I finally execute on the 1 minute or on the 5 minute time frame around key liquidity levels. But depending on the day, I may trade toward the liquidity or trade the reaction from it. And today was one of those days when I wanted to trade towards the liquidity. And I wanted to frame it like this is because it's important for you to know what is high probability and what it isn't. Today, not only it wasn't a high probability day from the way that the price printed, the candles, but also from my strategy, I decided to pick the lowest probability setup in the lowest probability day. So let's go through these levels very fast. I have previous day low, which is self-explanatory. You go and look at the daily chart, you go in the daily time frame, you put a horizontal level at the low, you put a horizontal level at the high. Now, the next one that I want to discuss is the pre-market lows and pre-market highs. And for this, to introduce it, I have to give you a bit of context. You see two vertical lines here at 17:30 on Monday, which was yesterday, 17:30 being local time here where I am in Central Europe, and you see another vertical line at 9 a.m. So pre-market are the hours that are outside the regular trading hours. So from 17:30 yesterday until 9 a.m. today, these are the hours that are outside the regular trading hours. The DAX trades between 9 a.m. and 17:30 p.m. its local time, like Germany local time. Just like the Nasdaq trades between 9:30 a.m. New York time until 16 p.m. or 4 p.m. 16 p.m. Sorry, that's wrong. It's not. It's 16 or 4 p.m. in the afternoon. This is how the DAX trades. So everything that is in between these two vertical lines is pre-market or overnight session, some people call it, however you want to call it. So I marked the high and the low, and I annotated it as pre-market lows and pre-market highs. I have another level that it says closing price, and then again I have another level which says 800 high, 800 low. And this, I want to modify it right now because I want this to go at the top. Right. And this is a good example actually to study because today it played out really nicely. So all these levels being explained, what am I doing with them? After I mark them, what am I doing as a discretionary liquidity intraday trader? I am looking for potential reactions around these levels to map my session by keeping in mind the higher time frame context. And when we go in the daily, I saw that we yesterday printed an indecision candle. Now, this candle might look different from broker to broker. Some candles perhaps are not having the body as much. Some candles perhaps have closed exactly with a very, very tiny body. But for more precision, what I'm going to do, I'm going to go in my list here where I have the DAX, and I'm going to go in the daily time frame of the futures asset. The futures asset is the underlying asset that basically gives the price discovery. So the price for the cash instrument, which is what I'm analyzing on Fivers here, it's actually derived from the futures asset. That's why you see all the people saying, I'm trading futures because it's the raw price. Yes, that is true. The futures are giving the raw price, and this is what drives every single other instrument that you are seeing in the CFD prop firms. Anyway, coming back here, I saw this candle. Where is it? Right. I've done something that I think needs to be cropped out. No, it doesn't need to be cropped out. It's okay because the password was not showing there. It's all good. So I have looked at the DAX in the futures, and I saw that we closed with a slightly bearish but indecision candle. And when I came today into the market, I said, okay, after this expansion that we had, after taking all this liquidity here that we've been taking, this is since January 2026, so it's half a year of price action. We swept above and we closed like this. I wanted to be short mainly in this day, but I did not know how the day is going to play out and how we are going to, and how the price is going to basically deliver towards the downside. So when I got at the charts this morning, basically, I'm going to put now the executions on, and it's going to get really, really messy because, first of all, this is how the price action looks. It's crowded as it is. I don't have to add anything to just notice that this is a mess. But I'm going to add the executions, and I will try to talk through every single candle and my decisions that I took. So I'm going to come here, put the executions, and tell you exactly what I've done. Right. So as you see, the green level at the top is the 8 a.m. candles high. And we have opened right here with this impulsive to the downside we have opened with this 1 minute candle. Now you might say, bro, you are trading in 1 minute. This is not enough information. Well, for the way I trade, every candle says something. But in this environment was very, very difficult to understand exactly what the market wanted to do. However, I have decided, as you see here, to open as the price was coming high, a short position, but my short position was open actually at 763. So when we started to go down in this candle, my short position was open here. After this red candle, we went first down and price came immediately against me. After we confirmed with this candle, I have decided in the next one to add another 2 lots in this candle here. And my entry was this time at 766 as we were coming down. As you can very well see that we came down here, came to the upside, we failed to create a higher high, we came down again as I was having 2 short positions, but all of a sudden we failed to create a lower low. And not only we failed to create a lower low, but we had a very strong bullish candle here. Even though this is 1 minute, price is fractal and it tells you absolutely everything you need to know. So when I saw this candle, I said, okay, I don't want to be in these 2 shorts anymore because my entries were here and here I was already on minus. So I got out for perhaps, I think it was around $80 to $100 loss. Not only I got out, but seeing that we failed to create lower lows here, after we had this move down, I decided to flip long. And the reason I decided to flip long is because of the 8 a.m. candle sweep. Most of the times when we have an impulsive or when we have a strong trend day, we are going to sweep the high and just go. So I said, okay, if the 8 a.m. high didn't send us lower, we are likely going to go higher. So I decided to not only to close my shorts here into minus, but I decided to flip long. And I took 3 contracts. I looked at the structure. I said, okay, I'm going to take 3 contracts. And when we came down here, I decided to add 3 more. Now, this is where I can say that not that I panicked, but I started to second guess myself because we had this candle where I decided to close, as you can see, one of my 3 lots position. And afterwards, I said, okay, I'm going to leave another one to see if we're going to come again for these lows. Basically, my second stop was here, as you can see, 757, 758. I got stopped out again. So I started already the session. I started the session in after 2 trade ideas. Basically, this was a short and this was a long here in a loss. And I said, okay, now after I took 2 losses, even though the losses were not extremely big, they amounted for about 150, I think, $200, and my maximum session allowance was 250. I said I'm going to let the price to print some to give me more information where I have more confirmation. I'm not just going to continue to dive into trades. And I waited until price got over here, knowing that we already swept the 8 a.m. candle high and we failed to go to the downside. When I saw the structure here, I was ready to go long to at least the closing price of the previous day or the pre-market highs. And I entered two lots here, 2 lots here. We retraced here, impulse higher, and I decided to add another 2 lots here. Next thing I know, the price goes all the way to the downside, literally melts. And it goes and it takes the pools of liquidity, the pool of liquidity that we formed right at the open. I'm going to zoom out in 5 minutes and you can have a look at how the first, let me see, the first 9 a.m. until 10:25, the first 1 hour and a half looked. I got literally chopped trying to trade towards one of the pools of liquidity. So the first trade, I would say it was higher probability because we swept the highs. My thesis was correct, but we couldn't come for the lows. Started to go higher. I flip long. I go long. We have a bit of structure forming here. The first long, it takes me out and I decide to wait for more confirmation. We start to form the confirmation, and what do we do after? When I enter, we go all the way down. At the moment when I exited this position, I have already broken my maximum session loss by $200, I think. And I have decided, though, I've broken my rule to enter another position with 6 lots at this time, which is my maximum allowance. So I increased basically, no, I didn't, I actually increased because I was with 222. I closed all 6, all of them here. And right immediately when I saw a reaction, I got baited and I went into the market with another 6 lots. This was not a big loss because the very next moment I caught myself and I said, okay, I'm not doing what I'm supposed to do. I'm basically reacting to this. I just entered into a trade right after being taken out. And I decided to close. I closed for another $90 loss or something like this. Overall, I'm going to swap here for a second just to show you what has happened in terms of monetary value. I think it's, let me go through window capture here, properties. Bear with me for a second. I'm doing this as it goes. So if I go here in the Tuesday journal, I have my news calendar, key levels, everything. And my P&L for the session went down to minus 598. My maximum session loss was at my maximum session loss was at 250. My maximum daily loss was at 500. So I broke both of these rules. And now my current balance sits at 48,952. Zooming out now, did the price do what I wanted to see it doing at the beginning of the session? Yes, it did. But does this matter? It doesn't matter absolutely at all. It doesn't matter at all. Even if we go another 200 points down from here, it does not matter. Wait, I have to swap this because I realized that I'm not in the right view. So I'm going to go here and go back to Fivers. Right. So it doesn't matter at all that the price came all the way down here. It doesn't matter anymore. This is irrelevant. But yeah, overall, I think it's fair to say that today has not been an easy session. It has been a difficult London session for me. The opening was extremely rotational, and I got caught on the wrong side of the price action several times. But this is not really important. I think what's more important, though, is that I broke two of my most important rules. And because of that, I won't be trading the New York session today because I have already reached my maximum daily loss. And that's a bit sad for me because usually Tuesdays are one of my stronger days. One of my stronger days. But hey, I don't know what to say. Rules only matter if you respect them on the days when you don't want to respect them. Rules only matter if you respect them on the days when you don't want to. I think that's what I can put in my mind at the very best. Now, looking back at this day, would I trade this morning again? Maybe. Maybe not. But this is hindsight. Looking at this price action, now I have the whole picture. This is hindsight. But what I definitely wouldn't repeat is the risk management mistake that I've done by trading after my initial losses. And that's it. I think, yeah, at the end of the day, this series are all about documenting the process honestly, whether the day ends green or red, and yeah, trying to learn something from it. And hopefully coming back tomorrow a little bit better, a little bit wiser, a little bit with more experience. So thank you for watching, because I think this is again overextended, but I'm trying my best to be efficient and keep everything on track. If you found this review helpful in any way for yourself, feel free to leave a like or a comment, and I will see you in the next one.